You can earn 5% on your checking or savings account. See the banks offering the extra bonus. So let's check this article out. So many banks offer a high annual percentage yield or APY, which acts as a cash back on your money to ensure their clients are maximizing their checking or savings accounts. In simple terms, the rate is essentially the percentage of interest you earn on your accounts, and the higher the APY, the better. The average APY is 0.24% on a savings account as reported by the Federal Deposit Insurance Corporation. But some banks, like Consumer Credit Union, SoFi, Capital One, and Discover, all offer higher rates that help you grow your money as you save. And there's another one, which I personally like, which is basically a service offered by Robinhood, where like if you're a gold member, you could earn basically like 3.5% or 3.75% on your money, which is pretty nice. And the only reason why I'm basically okay with putting money into something like Robinhood is because they are insured. They have different like forms of insurance. Like that's the only reason why I would really trust it. And also the app is just super convenient. Like if you're lazy and you just want something to look simple, it's not bad, right? But the thing is, like, I absolutely dislike putting money into these big institutional banks that pay you basically nothing, right? Which is depressing to see. Like, depressing to see, right? Like, for example, let's just say that you got like 30 grand in like an institutional bank. Let's say, for example, like Bank of America. You're going to basically make nothing on that money per month. But if you were to have something that would pay you like 3.75% or 5%, depending on the money, bank, whatever rate, etc., that $30,000 could potentially make you like $100 to $200 per month just from the interest that they're paying you, right? Which, isn't a lot in the grand scheme of things, but for just like keeping like maybe like your emergency fund that you're basically never really going to touch, but you're always going to basically have it in cash, it ain't a bad idea, you know? So why not make a few $100 per year or maybe even a couple thousand depending on how much money you got by putting it into a higher yield savings account specifically for like money that's going to be staying liquid, like staying in cash because it's more like an emergency fund that you're basically never going to really touch. Let's see. Keep in mind that you may need to open up a high yield savings account to maximize your interest. So, number one, Consumer Credit Union. By the way, I do like credit unions. They're typically pretty awesome, and they are usually very helpful if something bad happens, like a scammer or something gets a hold of you. So, with Consumer Credit Union, you can earn as much as 5% APY on account holdings of up to $10,000, which would equal $500 in interest. There are a few requirements you have to meet in order to grow your money. It includes making at least 12 monthly debit card purchases and setting up electronic transactions, including direct deposit, automated clearinghouse transfer, or mobile check deposit. Now, I don't really like that it has these types of requirements because basically the amount of money that you would have earned from the interest basically goes nil, right? You basically means nothing at the end of it. Let's see. You also have to make at least $1,000 in consumers credit union credit card purchases. Definitely do not like that at all, right? So savings accounts with more than $10,000 earn about 0.10 like 0.10% or a 0.20%. Even if you don't meet the requirements, account holders still earn 0.01% APY on all the balances. And like this is like the typical rate that you would actually get paid by like pretty much any bank, 0.01%, which is freaking disgusting. Right? Like think about it. Think about it like this. These banks are paying you 0.01% for taking your money and then lending it to other people or institutions at like a 4%, 5%, 7% interest rate. Like, do you realize how messed up that actually is? So pros, earn up to $500 on savings of up to $10,000, but guess what? You still got to spend at least $1,000 in a consumer's credit union credit card. Like, that's so beyond stupid. No monthly maintenance fees, but you're still having to spend that $1,000 on the credit card. Unlimited reimbursement for ATM fees, online banking and bill pay. Cons, $30 overdraft fee, no sign up bonus. Yeah, I don't really like that. SoFi. At SoFi, you can earn up to 3.25% APY on your savings account and get up to a $250 bonus when you sign up. And SoFi is currently offering up to a $250 cash bonus for new members who sign up for direct deposits. And if you're an existing member without direct deposit, you can sign up and still get the cash bonus before January 31st, 2023. You can also earn 2.5% APY on checking balances, and the best part is there's no minimum direct deposit requirement. That's pretty nice. Members with direct deposits can still earn 1.20% APY on all account balances in checking and savings. Pros, earn up to 3.25% APY, no minimum deposit, $250 cash bonus. Cons, cash deposits cost up to $4.95 and are available only through third party retailers. That's pretty disgusting. That I do not like that. Number three, Capital One. Capital One's 360 performance savings is another solid option to earn money as you save. You can earn a 3% APY on your savings account, and there are no monthly or maintenance fees. If you start with a balance of $5,000 in your account, you can earn $150 annually based on that rate. By the end of the year, you'll have $5,150 instead of just $5,000 had you put your money in a low APY savings account. Pros, earn 3% APY, no minimum deposit, $250 cash bonus. Cons, no sign up cash bonus, does not come with a debit card. And once your account is approved, you have 60 days to fund your account. So this isn't too bad, right? But here's the thing. With like the problem that I see with this one is like one, you don't get a debit card. You can't really access your money if you really wanted to. Like, or at least it would be hard. Whereas like with something like a Robinhood, you're getting paid 3.75%. Yeah, you're paying like a $5 per month like subscription fee for like to be a gold member, but at the same time, depending on how much money you got inside just cash in the account, you could basically be paying that, like it's basically paying itself and giving you a profit every single month without you really having to do anything, right? So I would still personally lean more towards like a Robinhood. And also, I like the fact that Robinhood does sell like stocks and whatnot because they have to follow pretty strict legal requirements to sell securities. So I do like that as well. Number four, Discover. Discover's online savings account is a great alternative to Capital One's 360 performance savings if you're looking for a sign up bonus. Discover's online savings account offers a 3% APY, and there is also no minimum deposit. So if you had $5,000 in your savings, you would earn $150. In addition to APY, you can also earn a $150 bonus when you make a deposit into your account of at least $15,000. When you deposit at least $25,000, you can earn a $200 bonus, but the deposit must be funded in your account within 30 days of your account opening. Earn 3% APY, no monthly fees on checking and savings accounts, up to $200 cashback bonus. Cons, only one physical branch location, no cash deposits. Other banks with cash bonus. So other banks like Chase, Citi, and Bank of America are offering cash bonuses from $50 to $300 just in time for Christmas. Yeah, see, like I still don't really like this because they don't really pay you like anything decent, really. Yeah, so I don't really like any of these services. And here's the thing: I don't necessarily like look. Capital One and Discover, what they're offering isn't necessarily too bad, but at the same time, you're basically linking up your money to pretty much a credit card company, right? And I personally do not like credit card companies. I think they're pretty much scumbags, personally. So, not really into that. Feel free to give your thoughts on this. If you want to learn how I got out of debt and grew my net worth, go down below or go to 40inbox.com. Stay tuned for more financial news commentary.